IREN stock is up over 500% this year, and today it's surged another 21% in pre-market trading, a Bitcoin miner that's now partnering with Microsoft on a nearly £10 billion AI deal. This is the story of how a cryptocurrency company transformed itself into an artificial intelligence infrastructure powerhouse. Let's break down what's happening with IREN and whether this rally has legs. On November 3rd, 2025, IREN announced a $9.7 billion multi-year GPU cloud services contract with Microsoft. That's not a typo, $9.7 billion. This is one of the largest infrastructure deals in the AI space this year. The agreement gives Microsoft access to NVIDIA's cutting-edge GB300 processors and GPUs through IREN's data centers. These will be deployed in phases through 2026 with liquid cooling solutions to handle the massive power requirements of AI workloads. The market's response was immediate and dramatic. IREN shares jumped from $60.75 at Friday's close to over $74 in pre-market trading, a 21% surge. Year to date, the stock is now up 518% compared to the S&P 500's 16% gain. That's a 32 times outperformance of the broader market. This deal validates IREN's business model transformation. They're not just mining Bitcoin anymore. They're providing critical infrastructure for the AI revolution. Microsoft doesn't sign $10 billion contracts lightly. This is a vote of confidence in IREN's capabilities. IREN, formerly known as Iris Energy, was founded in 2018 as a Bitcoin mining operation. But according to their chief commercial officer, Kent Draper, this pivot to AI wasn't actually a pivot at all. It was the plan from day one. Today, IREN operates both Bitcoin mining and AI cloud services in the same data halls. They're literally running AI workloads right next to cryptocurrency mining operations. This diversification is brilliant because it reduces their dependency on Bitcoin's volatile price movements. What makes IREN special? Three things: land, power, and infrastructure. IREN isn't alone in this transformation. Other Bitcoin miners like CleanSpark, TeraWulf, Riot, and Mara are all pivoting toward AI infrastructure, but IREN's Microsoft deal puts them at the front of the pack. While Riot is up 125% and Mara is up 17% this year, IREN's 5 and 18% gain shows they're executing this strategy better than their peers. Let's look at the key metrics. IREN's market cap now stands at $16.5 billion, and that's a massive valuation for a company with just 257 employees. Revenue is $501 million trailing 12 months with a 17.35% profit margin. The PE ratio is 155.77. That's expensive by traditional standards, but you're not buying IREN for its current earnings. You're buying it for the growth trajectory. The price-to-sales ratio of 20.95 tells us the market is pricing in significant revenue expansion. With the Microsoft deal bringing in $9.7 billion over multiple years, that revenue growth is now much more visible. IREN reports earnings on November 6th, just 2 days away. Analysts expect earnings per share to swing from a 27-cent loss last year to a 15-cent gain this year. Revenue is projected to climb 344% to $241.7 million for the quarter. The 52-week range tells the story, from $5.12 to $74.15. If you'd bought IREN at the April low of $5.13, you'd be up over 1,300% today. The 6-month return is 894%. These are cryptocurrency-level gains in a stock that's increasingly becoming an AI infrastructure play. When asked about the biggest constraint for AI growth, IREN's Kent Draper was clear: power still is the number one constraint. There is a lack of data center space today that's capable of handling the rack densities required for GPUs. The Electric Power Research Institute projects that U.S. data centers could consume up to 9% of the nation's total electricity by 2030, more than double today's level. This is where IREN's infrastructure becomes invaluable. They already have massive power contracts in place, data centers designed for high-density computing, liquid cooling systems to handle extreme heat loads, and land and facilities ready to scale. Building new data centers takes years and requires securing power contracts that are increasingly difficult to obtain. IREN's existing infrastructure gives them a significant first-mover advantage. They can deploy AI workloads today while competitors are still breaking ground. Now let's discuss the risks. IREN's beta of 420 means this stock is more than 4 times as volatile as the broader market. If you can't stomach 20–30% swings, this isn't the stock for you. At a PE of 155 and price to sales of 21, there's limited margin for error. If execution stumbles or the Microsoft deal faces delays, the stock could pull back sharply. Not everyone is bullish. H.C. Wainwright downgraded IREN to sell on October 29th, though they did raise their price target from 36 on to 45. At current prices around 74, that implies significant downside risk in their view. While IREN is diversifying into AI, they're still one of the top 3 public Bitcoin miners by hash rate. If Bitcoin crashes, it will impact their mining revenue and likely their stock price. The Microsoft deal needs to be executed flawlessly. Deploying NVIDIA GB300 processors with liquid cooling at scale is complex. Any delays or technical issues could damage the relationship and the stock. IREN has successfully positioned itself at the intersection of 2 massive trends: cryptocurrency and artificial intelligence. The Microsoft deal provides revenue visibility and validates their infrastructure capabilities. The company has real assets, power contracts, data centers, and hardware, in a market where these resources are increasingly scarce. Management has demonstrated strategic vision by building optionality into their platform from day one. However, the valuation is stretched. At 155 times earnings, you're paying a premium price for a company that's still proving its AI business model. The stock has already run 518% this year. Much of the good news may be priced in. Buying after a 21% pre-market surge could mean you're the last one in before a pullback. I'm giving IREN a conviction score of 4.2 out of 5. Strengths include the transformational Microsoft deal, dual revenue model, infrastructure assets in a supply-constrained market, strong execution on strategic pivot, and positioning at the intersection of AI and crypto trends. Concerns include extremely high valuation multiples, massive YTD run-up, high volatility, execution risk, and some analyst skepticism. Given the volatility and valuation, this should be a smaller position in a diversified portfolio. I'd suggest 2 to 3% maximum allocation. This is a high-risk, high-reward play that could double or halve from here. What to watch? Earnings on November 6th for commentary on the Microsoft deal timeline, Bitcoin price movements, GPU deployment updates, additional AI contracts, power costs, and competitive moves from Riot, Mara, and others. IREN has executed one of the most impressive business transformations in the tech sector. From a pure Bitcoin miner to a $16.5 billion AI infrastructure company with a $9.7 billion Microsoft contract. The stock's 518% year-to-date gain reflects that success. But at current valuations, you're paying for perfection. The Microsoft deal is transformational, but it needs to be executed flawlessly. My conviction score of 4.2 out of 5 reflects strong fundamentals and strategic positioning, tempered by valuation concerns and execution risk. If you're considering IREN, size your position appropriately for the volatility and watch those earnings on November 6th closely. This is Joe's Portfolio Review. Thanks for watching, and I'll see you tomorrow with another deep dive into the stocks that matter.